walk through some CVP questions so you can practice. Hopefully you'll have printed out this worksheet and tried it yourself, and only listening to this video if you have issues. Again, I'm going to keep repeating this. Only watching me do it without trying it yourself is spectating. You have to try this yourself. Okay, so the first one, if sales are $820,000 and variable costs are 55% of sales and operating income is $260,000, what is the contribution margin ratio? Okay, so I have these various things, useful tools for this chapter that I know, and pretty much, hopefully, eventually you will find that you don't need these. You'll go, your mind will let you know which one to go to. But I'm going to use this vertical income statement one. So I know sales are $820,000. If I can get my numbers to go in there. I know sales are $820,000, and I know that sales are always 100%. So basically, everything is always stated as a percent of sales. So 55% of sales. That means it's basically ratio to sales. So I know that this is 55%. Okay, and I know that contribution margin is net income minus variable costs is 45%. So my answer is 45%. A couple of other things that I could do on this question that they could ask. This is probably a multiple part question. I'm going to just fill in the rest of these. So I know that variable costs are 55% of sales, so I know that. I know my contribution margin. I could do it one of two ways. I could just take my sales minus my variable costs to get contribution margin, or I could also take sales times 45%. You see, I get the same number, so I'm going to delete that. It says operating income is $260,000. And so now I can back into my fixed costs. My fixed costs, I know that contribution margin minus fixed costs equals operating income. So I could answer a multiple or variety of questions based on this information. So this kind of is just something for you to practice. So now let's go on to part two. Okay, so question number two, the firm operated at 90% of capacity for the past year, during which fixed costs were $420, variable costs were 40% of sales. So generally speaking, when I have percentages, I migrate to this one, although you could probably do it in other ones. But I'm just going to plug in the numbers, 90% of capacity. Even if you don't know what to do with that, just keep it in mind, highlight it, etc. Fixed costs were $420,000. Variable costs were 40% of sales. And sales were $1 million. Okay, so I know that sales are 100% there. And I know that variable costs are 40% of sales, so sales minus variable costs is contribution margin. What is operating profit? So I can just subtract that. Then you get an operating profit, 2 must be A, $180,000. Okay, again, they could have asked me what is my contribution margin ratio. It would be 60% because, if variable costs make up of 40% of sales, the other 60% is contribution margin. Kind of get the terminology. Contribution margin is what amount of every sales dollar contributes towards covering fixed costs or operating income. Okay, let's go on to number three. Variable costs as a percentage of sales are 80%. Okay. Current sales are $600,000. Fixed costs are $130,000. And how much will operating income change if sales are increased by $40,000? Okay, so I have my formula in here, and let's just double check it because I had some cell references there. So I've got sales of $600,000, fixed costs are $130,000, and variable costs are 80%. Be careful because sometimes they give you contribution margin instead of variable costs. So Looks like I have negative 10,000. So I'm going to write that down there, because the question is, how much will operating income change if sales are increased by 40,000? So I'm just going to increase this by 40,000 to 640,000, and I see that I've got a $2,000 loss, and so 3 is A. It's going to go from negative 10,000 to negative 2,000, so I have an $8,000 increase. Okay, another shortcut that you could do is, I know that if my contribution margin is 20%, right here, I could just say I'm going to increase it by 40,000 times 0.20%, because 20 cents on every dollar contributes towards the bottom line once fixed costs are, or covering fixed costs. So my bottom line is going to go up by 20% of every sales dollar. So, whoops. So if I take 40,000 times 0.20%, I get the same $8,000. So that's just a shortcut way to do it. Sometimes my mind takes me that way. Sometimes my mind takes me this way. Whichever way you do it, make sure that either way is fine. Okay, so let's go on to the number 4. If Spice Inc. unit selling price is $60, okay, and variable costs are $35, fixed costs are $125 a thousand. Okay, so I've got fixed costs of $125,000. Okay, how much will operating income change if sales increase by 8,000 units? Current sales are 10,000 units. Okay, so I'm going to put this over here of 60. I'm going to put this as 35. Okay, and I'm going to change these up a percent. So hold on, I'll pause it. Okay, so first thing I'm going to do is figure out, I've got just stuck my number of units up there. So I have 10,000 times 60. That's my revenues, and my variable costs are 10,000 times 35. So my contribution margin is 600,000 minus 350,000. So also note, I could have just simply taken a shortcut here and said 60 minus 35 is 25. Okay, and then take 25 times 10,000 and start here. Okay, fixed costs are 125,000. So right now I have 125,000. Okay, so I'm going to put that down there so I don't lose it. Okay, so now I have what happens if sales increase by 8,000 units. So I have 18,000 there instead of that. So I have 325,000. So I have that minus that. Oops. I have 200,000 increase. So my answer is C. Okay. Let's also take a shortcut way to, just so you can see these. Really focus on seeing it multiple ways. So if sales increase by 8,000 units, and each unit contributes $25 toward the bottom line, if I take 8,000 units times 25, I get my $200,000. Okay. Again, a shortcut isn't necessarily a shortcut if it takes you quite a while to figure it out. But what I really want you to do as you practice this, really focus on how contribution margin is what changes. Fixed costs are fixed, so this doesn't change. So your bottom line is only going to go up by $25 for every single additional item you sell, and I have sold 8,000 additional units. Okay, now let's go to number 5. Let me pause this. A firm is operated at 80% capacity, during which fixed costs were $330,000. Notice 80% of capacity. Generally, if it's 100% at capacity and I want to increase sales, I can't. And so sometimes that, I don't know that I've ever seen this, but you might have a letter D or letter E that says you cannot do it. So for instance, if I was 80 at capacity and sales were $1 million and I wanted to double it, I can't, because I'm beyond capacity. So capacity only enters into the equation if I want to increase my overall production, and I have to check to see that can I do it or not. This particular one doesn't ask me to increase capacity. Some of these other ones did, but can't do it wasn't an option. Okay, so I've got fixed costs of 30,000. I've got sales of $1 million. Variable costs are 70% of sales. So operating profit or loss is B, $30,000 loss. Number 6, if fixed costs are 250,000, selling price is 125 and variable costs are 73. I know my contribution margin is 52. Okay. Once break-even sales in units. Okay, so this is from a prior problem. So this is what I have so far. Okay, now I know that break-even is in units. In units is fixed cost divided by contribution margin. So I have 250,000 divided by my contribution margin of 52. I have 4807.69. So number 6 is D, 4808 units. So you just round. I can't make a partial unit, so I need to go up to the next unit. Some people get really picky about, oh, you can't put 4807 because you can't break even on the, you're not yet breaking even. You have to break even on the 4,808th unit. So you always round up, even if it's little. Quite frankly, these are estimates of 125.73 and fixed costs of 250,000. So getting picky about whether it's 4807 or 4808, if this is, let's say it was 0.29 there instead of 0.69, how you round is not an issue. And a multiple choice, just pick the closest one. Okay, so that's number 6. Let me pause it, go on to number 6. Okay, if fixed costs are 750,000, this is the break-even point in sales dollars. I know break-even point in sales dollars, which is revenue, is fixed cost divided by contribution margin percent. So I have my fixed costs are $750,000. I'm going to divide by the contribution margin percent. So if variable costs are 60% of sales, then contribution margin is the other 40%. So I divide by 0.40. I have 1,875,000, so the answer is C. Number 8, if fixed costs are 120,000 and selling price is 240 and variable costs are 110, what amount of sales, so it's sales, so I want a percentage one, to realize an operating profit of 200,000. Okay, so I go down here, target profit is fixed cost plus target profit. So my fixed costs are 1,200,000. My target profit is 200,000. I'll just do that first. And I divide by my contribution margin percentage. So I'm going to put this actually up here. Delete that. Okay, so I know that my unit selling price is 240. My variable costs are 110. So my contribution is 130. So I want to know my percentage is 130 divided by 240. So my contribution margin is 54%. So I'm going to have this divided by my contribution margin percentage of 54% is, it's like I hit a number wrong, so let me pause this. Okay, so I would have answered this in sales dollars, but now I look at all of our problems is sales in units. So I wish the problem would have said what amount of sales in units are required to earn an operating income. Okay, so I might have typed in a wrong answer there too, but I do know that it is fixed costs. My fixed costs are 1,200 plus a target profit of 200,000. And I want it in units, so I'm going to take my fixed cost divided by my contribution margin per unit, which is the $130. So I have 10,769 units. Okay. Notice this is one where some people would say you have to actually round it up because I won't earn 200,000 unless I sell that additional unit. But again, it's a multiple choice. Don't worry about it. How you round it on a test, if it's a fill out question, I don't really care. If the question had asked for revenues, it would be that divided by contribution margin percent of 0.54, 2,540,000. And you can see that you could take 10,769 times 240 I get a little different because this was rounding of 2,584,000, etc. So they're about the same. Okay, let's go on to number 9. Only have 10 on this. Okay, so if fixed costs are 300,000 and unit selling price is 31 and variable cost is 22, what is break-even unit in sales or fixed costs are reduced by 30,000? Okay, so this is, it could be a multiple line of questions where I could figure out break-even here and then break-even, but it just asked me break-even for fixed costs. So what is break-even in sales units? So I wish they would have put that up there in that one. Okay, so I know that break-even in units is fixed cost divided by contribution margin. Okay, so I've got fixed costs of 300,000, but I'm going to reduce it by 30,000. So I've got fixed costs of 270,000. I have a selling price of 31 and a variable cost of 22. So my contribution margin is 9. So 270,000 divided by 9. That gives me, I don't want a percentage. So 30,000 units, so break even is 30,000 units. What was break even before? So if break even before would have been 300 divided by 9. So if the question would have asked how much does break even is reduced, you could say 3,333, but that wasn't the question. Okay, and for the final question, Johnson Plumbing fixed costs are 700,000. The unit contribution margin is 17. Okay, so again, be careful in these because they are giving us the contribution margin. So this one is 17 right there. So I don't know these. Okay, so fixed costs are 700,000 and how many units? So I want fixed cost plus target profit divided by contribution margin. So I have fixed costs of 700,000 plus target profit of 100,000. So 800,000. Okay, so I want my break even. So fixed cost divided by contribution margin is 17. And the answer is 47,058.82. So 10 is C, 47,059. So again, just practice some of these. That's all you can do is get better by practice and just really highlight which ones. Notice I've really used this a lot and these a lot. Sometimes this one is a good one to utilize also, especially if you have taxes, etc. So.